I am back again. I just want to update this trade that I'm in and look at a few other things if possible. But again, this is the Euro Aussie on the daily time frame. So I'm in this trade and I showed you I based this trade off of this support level here. So price came up, made a resistance level here. This was resistance, and then it broke resistance with a big strong candle. So usually when price breaks resistance, it doesn't really sit around and play with it much like it did here. Usually it breaks right through, but this broke. This was on a Friday. So this is a daily candle. When it opened up lower and then it went higher. Usually price likes to break right through. So here we had indication that it wasn't going to break this level, and then it came back and we had still had more indication that it wouldn't break that level. But here it went through and closed with a, this was a big candle that went up through the resistance level. Then price went up higher and came back down to this level. Now here's where we might have got confused and thought price might violate this level here, because you had a nice size candle going down, but look what happened afterwards. So these were indications that this level may hold. All right, so then once we saw this level hold, we went down to the 4 hour time frame and entered our trade on the 4 hour time frame. And then you could see I sat in this trade. This is what, 2, 3, 4, 5, almost 6 days really once I got into this trade. But finally we're starting to get some profit here. We're at 207 pips, and I'm looking for at least price to get up to this level here before I see some pullback or resistance here. So we're a little bit away from that level. We got a little bit level still to go, so maybe another 100 pips, maybe another 90 pips or so. So we're looking at this maybe getting up to about 290 to 300, close to 300 pips. And then if we can violate this level here, once we violate this previous high here, then this market probably will see a lot more upswing to this market here. So let's see what we have to our left. If we violate this level, then I'm going to start looking up here for big profit. All right, so you can see I already have a profit level set up here, but once we hit this level here, I want to make sure we can get through this level. But the way the market is moving, you could see we're in a nice uptrend here. So if we get up to this level, this will be a nice double top level, and then we could probably take profit there, and then you can counter trend trade if you really wanted to. All right, so this is the daily time frame I looked at this market. I based everything off of the daily, so I always want to see what the daily time frame is doing and base everything off of that when I look for a trade on the 4 hour time frame. So if I base my trade off of what's happening off this daily, then I know if I'm in with the trend or I'm in a pullback or whatever. So just looking at this move here, and I showed this in the previous video, that we had this uptrend. All right, and we put a trend line there. You could see price is just moving to the upside. Let me make this in there. And then once you see price moving to the upside, so you know that when you go long, you're going with this trend. This basically, we'll call this the primary trend on the daily time frame right here. It could be a smaller of the overall trend, but we don't need to go that deep. We'll call this the primary trend, and then this is your secondary trends, are the pullbacks here. So if we went in on a secondary trend, we know we're catching a pullback move. All right, and then boom, move higher, pull back. So the market's done that. Go higher, then pull back, go higher, and pull back. So we know if we get in a pullback trade, we're not with this primary trend. And then we move higher and then pull back. All right, so this is going to be considered the primary trend. The secondary trends would be the trends going higher, not the trends pulling back. Now, I misinformed you when I said the secondary trend would be the pullback trend. The secondary trend is just going to be part of this whole overall primary trend. So this would be a secondary trend. This would be a secondary trend. This is really the start of it all. These are just counter trend pullback moves, so we don't call them part of the secondary trend. The secondary trend is going to be the smaller moves within this primary trend. All right, so right now we're at 205 pip profit, which is nice. Okay, and the way I manage the trade, basically, guys, a lot of times I'll manage my trade like this. So I go down to the 4 hour time frame, and I find this works a lot. Okay, so you could see once the new candle opens, I move two candles behind it. So I move to the second previous low. So here's where we open, move back to this low is one low, and then move back to the next low. So if we were moving, going in a downtrend, it would be the opposite. So we will go to the second candle. So if we were down here, we would move, our stop would be up here. But this is such a big move here, I wouldn't even do it like that. But on a normal move here, you could see I'm two candles behind this candle. So a lot of times what will happen following this two candle behind move, even if price comes down deep, you always see it and it goes back up. What happens a lot of times, you get a nice little doji, and once you move your candle, I mean you move your stop loss up to that doji, that's what you do. Because a lot of times when we hit a level or get up to a top, you might see a doji develop, and that's where you can move your entry, your stop loss up to that level just below that doji, and then that gives the market a chance to either violate the low of that doji or continue higher. All right, so but until I see a doji, I'm going to stay two candles behind, and pretty much like that. Now if I get a monstrous move, I'll probably move up to one candle behind and try to let this run, and then sometime I just take some profit and let maybe however many lots I have on, maybe if I have 10 mini lots, or two standard lots, I may take one lot off and then let the other one run. So there's a lot of ways you could manage your trade. I'm not going to get deep into that right now about managing my trade. So that's a lot of things that you could do here. Now you also see, looking at this here, we had a breakout to the upside. So we had this Kumo breakout, and I believe when we had the breakout here, we weren't even ready. Yeah, we weren't even ready yet. So you'll see that we weren't ready here. Price is probably going to pull back. Maybe we can look for a price to pull back and look for a level where we could get a bounce and the market continues higher. So there's probably a chance to still get back into this market, and we're getting farther away from this Kijinsen here. So Kijinsen, you could see it starting to flatten out. Once you see that, the market's going to stall and slow down. All right, that may be another sign where I may want to take some profit and then let the others run. Then we may see the market pull back, because you could see we get our moves and then we get our pullback, then we get our moves. All right, but there's a good way for me to judge how far the move may go. All right, so just looking here, I'm going to look for the market to move. If I look at a 1-to-1 ratio, right? So I'm going to look for the market to move like this. I'm going to put Fibonacci expansions on here. All right, so if the market's going to move the same as it previously did, so let's put it right at the bottom, right at the top. So a 1-to-1 ratio would mean that A, B, so this would be A, B equals C, D. So D is going to be projected at this level right here, way up here where we have our entry. I mean, where we have our limit order where we're going to take profit. So that's going to be up here. So you're looking at the market doing the same move as it has here. So it makes this move, and this move is going to equal this move. So basically that's the 1-to-1 ratio. All right, so the market's moving pretty nice. I'd like to be able to lock in 200 pips. So once we get up a little higher, getting to this level would be vital, because then if we could break this level, then I can move my stop really much higher and lock in a lot more profit. But I still need to give the market room to move and continue higher to get to this point here. So I can't trail it too tight. So I still have to give it room to move, but I don't want to lose a lot of my profit. All right, so there's no way I'll never let it come all the way back. So at least the most I may let it come back down to is 150. So I'll give it some room to move. All right, but other than that, guys, that's what I'm looking at here. We're gonna continue to put out some videos, but I want to look at a few other things. Let's see what these other charts are looking like for the next upcoming week. All right, so let's look at some of these other pairs really quick, see if we see anything that's of relevance. So I already have a few pairs that I would like to look at. So we'll jump right into a few of these, as looking at we'll look at the Aussie yen here. The Aussie yen, I put this Aussie yen trade out. This is the daily time frame. So I put this out in the form, and I also alerted my members of this trade. I put it out the same time I did the Euro Aussie trade, and you could see what's happened with that trade ever since. But it looks like it's trying to develop some movement to the downside, quite possibly, because we're still below Kijinsen, which is major. We're below Tinkinson. We're definitely below the cloud. So we know the bias is bearish right now. So just looking at the market structure, once this market does start moving, I think you at least see it shoot down to this level and then quite possibly down here. So this was a strong support level down here. You could see it right here. So let's put that on our chart. So if the market starts, when the market starts moving, because there's no if, it'll eventually start moving. This is going to be your level, and I like to make a zone because this was the lowest point. So that'd be a really tiny zone. That doesn't really make much of a difference. That's a daily time frame, so it might be a little different on the 4 hour. And actually, I'm going to put it here like this because I'm using this base here, and this wick was included here, so it doesn't really matter if I put it on the bottom. I like to use this base and then this wick, and this was included. Now you could see this was a double bottom. Price came back down. Now look for a price to bounce off of here again. So there's a good possibility that you could see price come back down to this level. So we know, let me show you that we know we're wrong, and we know. All right, so that's what we're looking at on this pair. So we're looking for price to reach down to this level here. So you have that zone between 89,619 and 89,193. So if you go to the 4 hour time frame, you'll see it a little bit. All right, so 4 hour time frame is going to be pretty vital for us because you could see looking at the 4 hour time frame, and you could even look at the daily, you would see this. But we're in this range pretty much. We need to get out of this range. I'm going to make it a big range. I like to use the bases here, but we're going to use the wicks too on this upper level. And then I just want to see price get outside of this cloud. We get a Kumo breakout to the downside. You know, you'll be in line with this pretty much with this daily trend that we had. So you get this violation to the downside. A Kumo breakout will take you down to this level maybe. So that'll be a good indication of what the market might do here. We have all bearish signals. Our future is dark, so we got dark clouds. We got price inside the cloud, so that's going to be neutral signal. There's no signal there. That means we're pretty much ranging, consolidating, whatever. We have a TK crossover that's bearish. All right, and Chico span is inside price still, so that's not bearish. Once Chico span gets below this level, you'll still have to fight this cloud, but I think you'll see price, if price breaks out to the downside, we'll look for the Kumo breakout. Once you start breaking these fractal levels, then start looking to break this level here, this Kumo breakout to the downside, and then once you get that level, boom, shoot this all the way down to this level here. So we'll look at that as our possible target. All right, so that's what we're looking at there. Now we'll totally be wrong if we continue to bounce here, and then we'll shoot to see the market go higher. I think if it breaks, and if you see the market starting to go higher, we're definitely going to break out of this range, and you'll see us break much higher to the upside. All right, so we're at a point where the market has to make up its mind. Are you going to bounce here, or are you going to violate here? So we have to wait and see. The market's going to start to talk to us around this area and let us know, but definitely really be yelling at us when it gets down here. All right, so just look for that, as I'm saying, a breakout to the downside. And if you don't get it, watch to see what happens inside this area. I think if you violate the upside here and you start violating this fractal here, you're going to see the market continue to the upside, and you'll see the market even violate these levels up here and move much higher. All right, so that's Aussie yen, Aussie New Zealand dollar. Let's look at that really quick. Okay, looking at these Aussie pairs a lot. Looking here, you could see we're still following this market structure. Right now we're in a downtrend of this short downtrend here, but the overall market bias is probably bullish. Let's go to the daily, and that's true. The overall bias is bullish. You have some, I think you could see maybe the market move down to this support level here. So that's what you're looking at on the 4 hour time frame. So you may see the market move down to this support level here, and that's not much room. And then if it violates that level, you'll probably look at it shooting around this level here. So let's mark these on our charts really quick. There's a possibility that we get down to these levels here. These will be the levels that we're looking at the market dropping down to. Okay, so let's go to the 4 hour time frame. So we don't have much room considering if we break this here. So what we'll look for here, see how far price pulls back and then continue to the downside. I really don't look at much of a trade here because I really don't want to trade just between this distance to here. So that's not much of a trade opportunity. But we'll see what the market does here. Once it gets to this level, maybe it'll violate. If it violates this level, we're going to see the market continue down to this level here and then quite possibly down to the previous month low. All right, so you have a lot of market indecision right now. You don't really know what's going to go on right here, but it does look like there's still movement to the downside. Okay, we could even put this in a channel if we wanted to. So we could go just like this. Where's all my tools here? All right, so I'm going to put this channel on here and we just look at this channel really quickly. So this would be the channel. Pretty much put it like this. Get it off of 2 points. So I like to hit 2 points here. So if the market bounces here, there's a good possibility we can see it reach back up to the upside of this channel and then go to the downside. Now there's some resistance here, so there will be some resistance here, but you also see we got a flat cloud up here and we got the Kijins in here. So depending how far the pullback is, but also we have another level where we may see the market just pull back to. So that would pretty much align us. Let's see, depending on how the market moves, it could get us around that area somewhere, depending on how we move. Now we may not see much of a move. We could move much like this and then see the market drop. So we won't reach the top of this channel. All right, so sometime you throw a channel in there because that's going to be your support and resistance levels also. The market's in a channel often, believe it or not. You know, you have a channel here, you have a sideways channel here, you had a channel here that you can't really draw because it's so tight. This is another channel. Now you don't see me trading a lot of channels. I like to trade sideways channels. I don't really love these channels much like this. This is pretty much just drawing trend lines on your highs and your lows, your bull fractals and your bear fractals, and you got you a channel and you could pretty much ride those. So the next level we look for is in this area somewhere. All right, and then the market drops. So we'll leave that on our chart and we'll wait to see if that falls in place. If not, we'll look at our other levels. We still have other levels that we're looking at here. So I'm still looking for my bias to be bearish, but depending on how far the pullback is before I decide to get into a trade. Now if it doesn't pull back much farther than this, I probably won't look to get into a trade here because I need to violate certain levels to be sure I'm moving to the downside. But you can see the overall structure is based off going down to the downside here. So I'd like to see the market violate this level and continue down to that next level that we had here. Okay, then that would be a really good trade for us to get into. So that's going to be Aussie New Zealand dollar. Let's look at the Aussie US dollar. Aussie US dollar. And I put this Aussie US dollar on the chart for a couple reasons. I put it on our list for a few reasons. First of all, you can see the daily time frame, we're pretty bearish, but it looks like we hit a flat here. We're far from Kijinsen here, so you might see the market slow down and stall up here, wait for Kijinsen to catch up before it goes more to the downside, or it may bounce here and continue to the upside. So with that said, we have one of two scenarios, right? We could stay in this level range for a little while. So it's already showing us a 4-hour range, and I'm going to put it on our chart. And I'm not really precise with the levels right here, but you get the picture overall. Here's what we're looking at. So if this is our range, we don't need Ichimoku on our chart because Ichimoku does justice trading a range. It's not going to help you out. It did show us one thing, that we are far from Kijinsen on that daily. So knowing that, we can look for a bounce here. We get a bounce here, we trade this range back to the upside. So this would be a nice area to get into a bounce trade off of this range. So this is pretty much range trading. So that's what you're looking at on the Aussie US dollar 4-hour time frame. Good possibility to get into a nice bounce trade there. All right, now I like ranges that are smooth, much like this isn't a bad range. Okay, but you can see how it acted down here, and this is tough to trade. A little bit up here, it gets you in a trade, then spike you out, and then go your way. Not too bad here. So getting in here is going to be tough. That's the thing, getting in. I could show you a level all day long, but if you don't know how to get into the trade, then that's another thing. I'll show you how to get in a trade. I can show you how to get in here, and then you got spiked out. Okay, so just showing you a level where to get in is one thing, but knowing how to get into that level is another thing. Okay, so this is tough to get into. I could have told you this level here a bunch of times, but where would you put your stop loss? You would have got spiked out maybe three times in a trade here and gave up, and then the market went higher. All right, so that's the same thing here. I can tell you this level, but do you know how to get into the trade at this level? All right, so that's going to be the Aussie US dollar. Let's look at the Swiss franc yen. And I put this on the chart for another reason also, because it's the same as what I just showed you. Ichimoku is not going to do you any justice here. I had a trader tell me that he had a really bad month this month, and I told him, look at the markets. You know, you can't use Ichimoku for everything, so you have to have different weapons for different scenarios, for different parts times the market's doing different. You know, the market's not always in a range, or it's not always in a trend. So when it's in a trend, you have to have your weapon that you're going to use of for that kind of trading. But then when it's in a range, you have to have that weapon also. And then you have to also know that the market's in a trend or a range, right? That's going to help you a lot. So if you don't know or can't figure out when the market's getting into a range, you probably lose out a few trades before you realize you're in a range. And by then, you probably lost most of what you gathered maybe here. So if you got in a trade here, then you lose a lot of it here because it's now sideways and you're still looking for it to go to the downside and it doesn't, and maybe you lose two good trades in there. All right, so you have to be able to distinguish a range really quickly so that you don't lose a lot of your money. All right, and you're not trading it the same as you would a trend. So that's one vital thing, because a lot of new traders don't even realize that you have to trade different for different market scenarios, different market conditions. This is a nice trend to the downside. This is sideways pretty much here. You would trade this different than you would trade this. And if you trade these both the same ways, pretty much you might have issues. You know, you might have some issues with your trading. All right, so that's really a big thing. So that's really I wanted to show you. This Ichimoku is not going to do you any justice right here. So really, you would take this off your chart, and once it starts to violate some levels, then you might be able to say you might want to throw it back on your chart. Maybe just know where the levels are that you need to violate. All right, in order to see the market start moving. But once the market starts moving, then you could throw Ichimoku on your chart and look at it again. And basically, if you just want to throw it on your chart, look at it, see what the bias is, and then take it off your chart, you could do that also. You don't have to leave it on your chart. All right, so we're looking at Swiss franc yen here. Let's go to the euro pound. Let's look at that euro pound. This is the daily time frame, and look, we got a really strong move to the upside here. Look like we have a bounce off here. Now we got a strong candle hitting this Kijinsen. Now you still got 3 hours before this candle closed, 3 hours and 12 minutes. So don't count this candle as what it is right now. It may close lower than this Kijinsen. So they're still biased to the downside. This is a slight pullback. I don't know how far we'll see the pullback move. Um, I'm looking at this level here as a resistance point. All right, and Kijinsen's right here, so you can make this a little zone. You can see our resistance zone. We've just violated that level strongly, but the market hasn't closed yet, so we have to wait and see. Now if the market gives me a long wick candle right here and can't violate this level of the Kijinsen and this zone that I've drawn in here, then I may look for this bounce here and continue to the downside. So let's go to the 4 hour, see what we're looking at. So 4 hour, you're in a Kumo breakout, and it's not ready yet, not quite. So we'll see what happens. I think you may see this market pull back down here, but if not, we'll just see it continue higher, and we're not in the trade. We missed the trade. We'll wait for it to get to a level that we want to trade. So yeah, euro pound looks nice for maybe a bounce to the downside off of this level, but we want to wait and see what happens in 3 hours based off of this daily time frame. All right, so Don't forget to just let this candle close and see what you got then. This is also a very strong support level here. It was strong. Okay, market came down. It was a support level here. Let's see if it wasn't. It was. Wow, this is a strong level. Level here, level here, and then really strong here before it bounced in and said, I'm done, and violated. Now it's back at that level. So do we expect it to violate this level? Okay, so if it's going to violate, this was strong support to the downside for quite a while. And now I would think that it's going to be strong resistance to the upside. All right, so we'll wait and see. But our bias is bearish, so we would look for a trade to the downside off of this level. All right, so we're going to wait, see what this candle does at the end of the day. And if it's giving us any indication that it's not going to violate this level, then we may look to go short here. All right, so euro pound looking really good for us right now. That's euro pound. Euro New Zealand dollar, we're going to look at that really quick. Let's go to euro New Zealand dollar. And I drew this on our list also because I wanted to show you again, same, you have the exact same thing here. This is, Ichimoku is not really great in this kind of condition. You can see all the crossovers here, boom, 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 crossover, crossover, crossover. And you can see how many times the cloud crossed over here, all these TK crossovers. This is not good for trading with Ichimoku. This is going to probably give you a lot of losses when you're trading with this in this kind of scenario. But again, having it on my chart gives me some levels of resistance, support and resistance, so I know that if I see this level and I see a sign that this level is going to hold here, because you can see this level and all this level just basically lines up with this previous month's high. So looking at this monthly time frame high, this is the previous month's high right here, and this is the previous week's high. So there's the previous week's high. Now if we violate this level, then we probably see the market move to the upside. All right, but yeah, I just really do this on my chart to show you guys that this is not good to use Ichimoku in this kind of trading conditions. And other than that, I'm going to see what the market does do at this level. And it's another level where the market has to talk to you. That's what you want, the market to talk to you. And it talks to you at certain levels, really, because you're telling the market, what are you going to do here? You have to either violate or you have to honor. If it violates, it goes to the upside. If it honors, it goes back to the downside. It's going to show us what it's going to do by a big strong candle violating maybe, or a candle that's weak and long wick pointing back to the downside maybe. So either way, the market may talk to you at this level and a level where you may be able to get into a trade. All right, that's what we wait for. Look for the market where it's going to stop and talk to you for a little bit, and then you can find your level to get into a trade. So that's euro New Zealand dollar. Let's look at one last pair. New Zealand dollar, Swiss franc. All right. Daily time frame, you can see here, and I'm looking for this to go back to the downside. We're in a nice move to the downside. We do have some support here, so we may get a bounce here and just move back down to this level. But this is a daily time frame, so we're looking here. We're in a range pretty much. You can see that we're flattened out here. The market was moving down. We flattened out pretty much here. Eventually, I think we'll see it move to the upside. Let's go to the 4-hour time frame. Now, based off of the 4-hour time frame, I think we may still go to the upside. All right, because we're looking at these levels where we may bounce, and it's showing us. And if it bounces, it's going to violate and continue to the upside and break that range. I always like to listen to my daily, though, pretty much. So really with the daily, I'd have to wait for the other 3 hours because this candle could close strong up here. Then that will give me some more decision, a better idea of what the market might do. But the way it's sitting now, we're at a nice little level of resistance. So depending on how it closes today, if it closes as is, I really think we can see some more downside momentum because basically we're in a downtrend. Now, again, we're very close to this level where we bounced off of. Now, another thing I could do is throw on, oops, sorry. Let's do this. Let's go to the ultimate. And that ultimate will tell me a little bit. This is flat. This is pointing upwards. We have some divergence here. It's bullish divergence. So yeah, you may see the market continue higher. That's the daily time frame. So divergence can last for a long time. You're not going to get in a trade just off of divergence. When you see divergence, it just gives you a sign that maybe. Now I'm getting mixed signals too. See, so the 4 hour is showing bearish divergence. All right, so that's another thing. I'm showing bearish divergence 4 hour. So I'm going to stick to my analysis, what I'm looking at, and remove this. And it's just something that I do know, though, that we have some divergence on both sides here. So what I see and what I think is you may get a bounce here and the market continue down to this level here. So based off of that divergence, the daily time frame, if you have divergence, that divergence can last for a long time. Don't just look at divergence on a chart and say, oh, it's going to move up higher. Daily divergence can last for quite a while. So with that said, we may see a bounce at this level. I want to still see what happens in 3 hours. And then if we see this market bounce here, then we could look for a trade down to the downside, maybe somewhere around here. If we violate this level, we'll look for our target down here and then eventually here. All right, so that's the New Zealand dollar, Swiss franc, and that's all of the pairs that I wanted to look at. So hopefully you guys are getting something from this. Hopefully I'm helping you guys out. If you want to get even more help, just sign up for our forum. Our forum is free, a free member forum. That's part of it. Then I have the members forum, the paid members forum. So you could either be a free members forum or a paid member in our forum. And what you get there, you get a lot of information from a lot of different people. I'm going to tell you right now, our forum is the most active forum in on the internet based off of being an Ichimoku forum. But we're not just totally Ichimoku. We're price action, everything. We trade a lot of different things. You know, I don't just teach. I'm not trying to teach a trader to be an Ichimoku trader. I'm trying to teach a trader to be a trader. So we work to be better traders, not better Ichimoku traders. Yeah, we do that also, but we want to also be better traders. So I have that Ichimoku course that you could purchase if you wanted to, or you could just become a member and be a member of our forum and of our site. So you'll be a FX at one glance member, and that offers you a bunch of things, a bunch of ways to help you be successful. You know, weekly webinars, weekly and daily trade analysis and trade ideas. I posted those videos every week. Then we have trade text alerts, and everything I do it. I don't use anything automated as far as getting into the market and looking at that. What I tell you and show you is based off of what I see in the market and just the knowledge that I'm using from my own self. So yeah, some things I don't hit right on the market as I mean as quickly or as able to catch everything because I'm not trading automated. What I'm doing is trading what I see. So when I send stuff out to my members, it's based off of me breaking down the charts and looking at that kind of stuff. So yeah, I'd love to have you guys just come in as even as free members, you know, to the forum and just learn a lot there still. But if you want to become a member of FX at One Glance, that's my site, FX at One Glance. Just go to my site, FX at oneglance.com. And when you go there, just look in the upper navigation bar for courses, and you could join as a member or you could purchase the Ichimoku course, online course. That's a video course, and you have access to that 24 hours a day. And you have to take a test to move on to the next level. So you'll take an online test, and then once you pass that test, you'll get a certificate telling you how to move forward. All right. Currently, there's 11 videos, and probably about each video is at least an hour. And I think last time I totaled it up, it was like 26 hours or more of Ichimoku analysis and breakdown training and teaching. So pretty much 26 hours worth of videos right now. And I'm constantly updating new things if there's new things I want to put in there. So right now we're at 11 videos with 26 hours of training. All right, guys. So I think I've talked enough and spent a lot of your time up, and I'm gonna end this right now. But like I said, I'll be back again, and hopefully I'm blessing somebody out there. Until next time, traders, have a great weekend because we're almost there. And God bless. So long.